What if I told you that the absolute worst crypto disasters of 2025 were actually setting the stage for 100x moonshots in 2026? Yeah, you heard me right. Today, we're diving deep into 3 massive crypto failures. We're going to see how these meltdowns are secretly a playbook for finding the next big winners. Let's get right into it.
Look, when you see headlines about billions of dollars vanishing into thin air, it's scary. I get it. But for those who know what to look for, that's not a stop sign. It's a giant flashing green light. This whole explainer is about seeing past the panic. We're not just looking at the crash sites. We're figuring out how these projects rebuilt themselves, what made them so tough under pressure, and what that tells us about who's going to survive and thrive.
So, to keep this laser focused, I picked just 3 heavy hitters: Toncoin, Near Protocol, and Polkadot. Now, why these 3? Well, the method was simple. First, we're only looking at famous coins. No obscure small-cap gambles here. Second, these are all high-value projects that stayed above a $5 billion market cap even when things got ugly. And finally, they all took a massive price dive. The whole point is to see how the big players handle a real crisis and what opportunities that creates. All right, here's our game plan for today. We're going to start with Ton's wild ride, breaking down exactly what went wrong. Then we'll shift gears to Near and its epic comeback story. After that, we'll look at Polkadot's big pivot. And stick around to the end because I'm going to give you a little alpha leak, a sneak peek at the pro playbook for 2026. Based on everything we learned today, let's do this.
Okay, first up, Ton. Its biggest selling point has always been that tight integration with Telegram. But in 2025, that strength became its biggest weakness. The problem was something called mismatched APIs. Basically, the rules that let Telegram and the Ton blockchain talk to each other were out of sync. This caused insane transaction delays, and people were getting frustrated. Confidence was shaken, for sure, but the dev team jumped on it, pushed out updates like crazy, and didn't just fix the problem. They made the whole connection more seamless and stronger than ever before.
And check this out. This slide shows you exactly what happened when those flaws came to light. A brutal 40% price drop. Ouch. Now, for most people, that's a panic sell moment. But for anyone who actually understood the tech and trusted the team to fix it, that wasn't a disaster, it was a fire sale. And this is a huge theme you're going to see over and over today. The market totally freaks out over short-term problems that are totally fixable, creating this massive gap between the price and the real value.
Seriously, how often do you see a major project with a built-in user base of hundreds of millions take a hit like that over a tech glitch that got patched in no time? It's in these moments of pure panic that the best opportunities are born. By the way, if you're finding this breakdown useful, do me a favor and hit that subscribe button. We do deep dives like this all the time.
So the next hurdle for TON was all about scaling. The network uses this cool tech called sharding. Think of it like adding more lanes to a highway to handle more traffic. But when a huge wave of users hit all at once, some of those lanes got completely gridlocked. The whole network slowed to a crawl. But again, the team rolled out upgrades that fixed the architecture, and suddenly, the network could handle millions of transactions per second. It just goes to show, even the best tech needs to be battle-tested in the real world.
All right, let's talk security, because, that's everything. Ton had its trial by fire when hackers found a weakness in some of its multi-signature wallets. These are the wallets that need multiple keys to approve a transaction. They're supposed to be extra safe. But an exploit let attackers drain funds. Now, that's a really bad day. But it forced a complete security overhaul. The disaster literally led to them building Ironclad hacker-proof protocols. It's a brutal way to learn, but it makes the whole system tougher in the long run.
Now, let's see how all this chaos hit Ton's decentralized exchanges, the DEXs. With all the uncertainty, you had massive panic selling. People were dumping their coins, which completely dried up the liquidity pools you need for trading. Fees went through the roof, trades were failing, it was a mess. This whole crisis basically flushed out all the weak hands, the short-term gamblers. But once the dust settled, the whales, the big, long-term investors, saw their chance. They jumped in with fresh liquidity, and that brought back the confidence in the trading volume in a big way.
You can't be a major crypto player without getting some heat from regulators. It's just part of the game. In 2025, Ton was under the microscope for some of its privacy features. Regulators were worried, and that uncertainty definitely caused a price dip. But instead of fighting, the project worked with them. And what happened? They ended up with crystal clear rules to operate under. And that regulatory clarity, that's like a dinner bell for institutional investors who need that kind of certainty before they'll even touch an asset.
So if we zoom out and look at the whole Ton story, it's pretty clear. You had this domino effect of problems. Tech glitches, security holes, regulatory pressure. You could see it on-chain. The total value locked, or TVL, just tanked. But here's the key. For every single problem, they found a solution, deployed a fix, and came back even stronger. That kind of resilience, that ability to adapt on the fly, That's what you want to see for long-term survival in the space.
Okay, moving on to our second case study, Near Protocol. In 2025, Near got caught up in this massive hype cycle around AI proxies. The marketing was everywhere, but the tech just wasn't ready for prime time. So when reality hit, that hype bubble popped hard. On top of that, just like Ton, they had their own network congestion problems. But what happened? The team put their heads down, rolled out the necessary upgrades, and fixed the performance issues. Now, that same AI tech is actually crushing it.
And the pain didn't stop there for Near. They got hit with a triple threat. They had exploits on their cross-chain bridges, the things you need to move money between blockchains. They got delisted from a few big exchanges, and they had issues where all their liquidity was stuck in just a couple of places. I mean, each one of those is a major test. But again, this just shook out the people who weren't true believers and gave the team a chance to build more secure bridges and get the ecosystem back on solid ground.
And for our third and final disaster turned opportunity, let's talk about Polkadot. DOT's whole thing is its Parachain model, where different blockchains can all plug into one main hub. Super cool idea. But in practice, the auctions for those Parachain slots turned into these crazy expensive bidding wars. Plus, their cross-chain bridges were having problems talking to each other. It was a big setback for their core technology. But here's the pivot. This failure forced the Polkadot team to look to the future, and now they're focused on building quantum-resistant upgrades. They're trying to make the network unbreakable for decades to come.
So we've looked at 3 crypto giants that went through hell and came back stronger. The big question now is, what's the lesson here? How can you actually use this information to make smarter moves and, maybe profit from the next big comeback? Let's get into the playbook. Now, in our very next explainer, we're going to take everything we've learned today and build out a full strategic playbook for 2026. I'm talking about using AI to manage your risk, how to use layer 2s to protect your portfolio from volatility, and my personal favorite, how to use on-chain data to find those hidden gems before they pop. So make sure you're subscribed, because you are not going to want to miss that one.
And of course, I have to say this. None of this is financial advice. This is purely for educational and entertainment purposes. You absolutely have to do your own research before making any investment decisions. Thanks so much for watching.
All right, we are back for part 2 of the 2025 Crypto Disaster Playbook. If you thought the first half was good, you're going to want to stick around for this. We're about to break down the rest of this alpha. Let's jump right back in.
Okay, first up, let's circle back to Ton. We're going to look at the final couple of hurdles, the events that pretty much everyone was calling a disaster. But here's the thing. These weren't just roadblocks. Think of them more like the final stress test that forged the network for its huge comeback.
So what exactly went down? Well, in 2025, the regulators came knocking. They started poking around Ton, zeroing in on its privacy features, and basically calling them attack vectors. At the exact same time, the on-chain metrics just fell off a cliff. We're talking total value locked, or TVL, the lifeblood of the ecosystem, it just tanked. And to top it all off, that super hyped migration of AI agents, it hit a bunch of technical problems. It really looked like the whole thing was about to collapse. Billions were flying out the door, and the price just cratered.
But was it really a collapse? See, this is where the legends separate from the crowd. For them, this wasn't a disaster at all. It was the market doing what it does best, purging all the hype and the weak hands. For anyone who actually understood the tech underneath, this was a massive flashing neon sign that said, buy. This was a golden opportunity to get into a project that was literally being battle-tested in real time and forced to grow up, fast.
And here's how they turned it all around. That regulatory heat, well, it actually forced Ton to get its act together and create clear rules. And guess what? That brought in a flood of institutional money, the big players who need that kind of clarity. Those failed AI agents, the devs jumped on it, rolled out patches, and suddenly those agents weren't just working, they were absolutely thriving. See? What looked like a total failure was actually the launchpad for some insane growth.
And if you need proof, just look at the numbers. Check out this rebound in total value locked, the TVL. It didn't just bounce back, it went completely parabolic. For the smart money that got in during that dip, the returns were just massive. We're talking like 5x gains for some. This is a perfect example of how the so-called failures of 2025 set up the monster gains of 2026.
You smell that? That's the smell of opportunity, my friends. This whole pattern, seeing the diamond in the rough during a downturn, that's the key. If you're picking up what I'm putting down and you want more alpha like this, you know what to do. Make sure you're subscribed.
Okay, let's keep this train rolling. Next up, Near Protocol. Oh man, this is a classic story of a project that went from being crushed by its own hype to becoming an absolute hero, building a super resilient ecosystem that set it up for a massive future. And again, it all comes down to perspective, right? The public, the mainstream, they saw a total disaster. The AI hype bubble burst, and their big tech solution, sharding, splitting the network to make it faster, it got totally clogged up. But the legends, they saw something completely different. They saw a much-needed price correction and a golden chance for the protocol to rebuild itself, but this time on a rock-solid foundation. And man, the problems just kept piling up. First, the AI proxy hype just vanished into thin air. Then the sharding network got totally overloaded. Then, to make things worse, old exploits on their bridges started popping up again. Centralized exchanges got spooked and started delisting it, which caused panic. And finally, the liquidity got all bunched up in just a few places, which is super dangerous. Seriously, on the surface, it was a complete and utter train wreck. But here's the beautiful part. For every single one of those failures, there was a fix. They rolled out protocol upgrades that unclogged the shards. The AI proxies got patched up and started absolutely crushing it, just like they were supposed to. They secured and reinforced the bridges, which brought the exchanges back. They relisted the token, and liquidity finally balanced out. You see? These shakeouts are brutal, but they reward the people who stick around. The long-term believers, and of course, the people who bought that dip, saw some incredible return. Look, if this is hitting home for you, do me a favor and share this explainer. Let's spread these moon vibes. There are way too many people out there who see a red market and just panic. They need to see that a dip isn't just a problem, it's an opportunity.
All right, buckle up for our final case study, Polkadot. This one's all about a massive strategic pivot. While a lot of people were looking at it and seeing nothing but inefficiency and failure, something much, much bigger was happening behind the scenes. This was the setup for a huge technological leap. This is the quantum comeback.
And here we go again. It's that tale of two perspectives. The public saw chaos. They saw the Parachain auctions getting stuck in these crazy bidding wars. They saw cross-chain bridges failing. Basically, they saw a broken project. But the legends? They saw the long game. They saw preparation. They saw the groundwork being laid for something truly unbreakable, a quantum-resistant future. So let's pause for a second, because this term is super important. Quantum-resistant. What does that even mean? Look, this isn't just some small patch or a simple upgrade. We're talking about a completely new class of security. It's designed to be unbreakable, even by the crazy powerful quantum computers we know are coming down the line. The whole point is to make the network totally and completely future-proof.
Yeah, let that sink in for a minute. All those problems, the messy parachains, the broken bridges, they weren't actually failures when you look at the big picture. They were necessary evils, stress tests that cleared the path for the game-changing, quantum-resistant upgrades in 2026. Sure, the price hit rock bottom, but that was the signal. That was the buying opportunity for what is now one of the most secure and interconnected ecosystems out there.
So, are you starting to see the pattern here? Are you seeing how you can actually profit from these massive comebacks? If this is clicking for you, do me a solid and smash that like button. Let me know this is hitting the mark. Okay, since you've stuck with me through all this, I'm going to give you a little reward, a sneak peek into our very next explainer. We're going to lay out the entire pro playbook for your 2026 crypto portfolio. Here's just a little taste of what's coming.
First up, we're diving deep into some next-level diversification hacks. I'm talking about using AI-driven risk models to help you get something like 10x safer gains. This is how you build a portfolio that can weather any storm.
Next, we're talking layer 2s. We're going to break down allocation strategies that let you crush volatility like a boss. No more getting wrecked by massive price swings. And finally, the one you've all been waiting for. We're going to show you how to find the hidden gems. We're talking about using on-chain data that literally nobody else is looking at to find those next big projects before they blow up. Look, if any of that sounds good to you, and I know it does, you need to hit that notification bell right now. I'm telling you, this next alpha drop is going to absolutely change your game. You do not want to miss it. And hey, just the usual quick reminder, none of this is financial advice. This is all for education and, a bit of entertainment. Always do your own research. All right, that's it from me. Thanks for tuning in.